Good evening and welcome to the Ascendo Treasure Group. This is our daily stock market wrap-up for Wednesday, December 2nd, 2009. Our website is blog.ascendotraders.com, where we put together effective video technical analysis trading plans on a daily basis. We believe that trading plans help us prepare for each trading session. We get to find out what can affect our trades, and it also helps us to stay focused and disciplined, which cuts down on our research time, which allows us to spend time with our families. So, the market it was today. Well, once again, we had the dollar affect the market a little bit. The market kind of took off in the beginning of the market, and then the dollar started to gain ground as the market retraced. So the dollar helped a little bit. But on a sideways day like this, obviously nothing really was a catalyst. The thing that I thought, was hopefully going to bring back some volume and some sentiment into the market was ADP. And even though ADP beat expectations, it was lower than expected. They were hoping 150,000. It was like 163, but it was still down 30,000 from last month. So it was within range, but not as good as people expected. So that's probably why it didn't really do anything for the market. The market did sell off a little bit into the open, and then we just kind of consolidated for the rest of the day, up and down. That initial opening and rally off the open did send us to a new S&P high for the year of 2009. And then at 2 o'clock, we had Fed's Beige Book, which basically said that the economic conditions remain weak, although the banks believe that things are improving. Thank you, banks. Enjoy the government money. But again, there was really nothing to trade off of the Fed Beige Book at 2 o'clock either. 5 of the 10 sectors in the positive territory. Well, that kind of goes with a mixed day. And you can see the Dow was down and the other two indexes were up for the day. Nothing on our earnings front. And we did have BB&T and SunTrust upgraded by Credit Suisse. And again, you would think that would be well for the market because the banks the financial sector does help us with the S&P 500, but not much there. Amazon had its target raised to 160. And KB Homes had they were upgraded, and MTL was downgraded. But again, none of that moved the market. So tomorrow, what do we have? Initial jobless claims. We're at a point, though, if we can get the jobless initial claims down to about 100,000, 125,000, the indication of that will be that the unemployment rate will be under 10%. So that certainly could be bullish. So if we get a good number, $125,000, $100,000 for initial claims, then that will be very good for unemployment, which should send the market up. Let's go ahead and take a look at the overview of today's action. As we look at our market overview, we can see our little kaleidoscope Rubik's Cube, and because we have the multicolored red and greens, different shades of red and green, you can kind of see the blah day that today was. The other thing that I want to point out today is you can see the rally off the opening, and then the dollar kind of gained some ground. We fell off of that, and then we consolidated. And we've been doing this overview with FinViz for about a month now, and I want you to think about this. When's the last time you saw an afternoon sell-off? Yeah, I'm thinking the same thing. Well, maybe we'll take a look at that when I pull up Thinkorswim for our intraday look, but we've had some afternoon rallies. I mean, yesterday we had a rally from 3 o'clock, but overall, we have not had an afternoon sell-off in a long time. Advancing declining, basically in the middle, new highs above the 50-minute. Everything seems basically in this channel pattern, consolidation pattern, and we'll look more at that once we get to the charts. So here we are looking at the internals. We already talked about, new highs, still good number. We had 90% new highs. Advanced decliners, you can see we had a good positive number. Although if you come down to the bottom, you can see the NASDAQ was a better as far as advancing than the NYSE. The other thing to take a look at is look at the volume. Well, I'm going to talk about that. Both numbers are red. We already have low volume, and we're having less volume. Now, what's really interesting is on this blah day, I mean, 0.6 is not a great bullish market breadth, which is a measurement of the up volume divided by the down volume. But at the same time, on this blah day, we did have bullish breath. And that's what we should also see. Look at the volume here on the NASDAQ. Not that bad, but much better than the down volume. Look at the up volume here on the NYSE. So on a blah day, yes, we had lighter volume, but it was still bullish. Our daily charts show that, again, here we are at the highs, 2009 highs, and we're unable to break up higher. Remember, we said yesterday that if we can get above 10,500, that should be our next breakout area. We can also see the back down to no volume. Where's the market sentiment? And you can see we're still out of the wedge, but again, we haven't been able to break higher. Switching over to the NASDAQ, you can see this is, as far as a consolidation pattern, you can see it's even worse here in the NASDAQ. And again, we talked about it yesterday. We need to get above these highs, or keep in mind, we can always come back down to the lows. So volume still on par with the NASDAQ, but we're still in a consolidation pattern, so we need to see a breakout. Finally, with the S&P 500, again, we had a fractional high, but we didn't close up there, so not a closing high, but here we are at the high. So with the decrease in volume, consolidation, we really need to break above these levels in order to really confirm that the market wants to continue higher. I mean, that's it. We've been talking about all these swing highs, and now as we're here trying to make a new swing high, we've already made it, but as far as going higher, why isn't the market doing that? You know, as we go into the holidays and we lose our direction as far as economic and earnings data, what's going to be next? So here we are with the ADP. We sold off of that report at the market. We opened up, made a new high. Well, what I did is I drew a line here at this 1480 level and put a buy stop below that. Again, intraday support and resistance. It was resistance overnight, became support as the market opened, and we broke there. And then the same thing happened at 1440. It became support, 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 and then we broke there. We went down, and then the rest of the day we had our Woody's pivot holding us up for the rest of the evening. As we move to the education portion of our video, we're still using the book Trading in the Zone by Mark Douglas and Trading in a Moment. And we're continuing with the thought of the now moment being unique. We talked about this yesterday, that the people who made up this chart pattern, this mathematical calculation as your indicator, remember all indicators are just mathematical calculations, the traders that were involved in making this pattern today are probably not the same traders that formed this pattern in the past. That doesn't mean that Head and Shoulders aren't powerful patterns and fail new highs and rising 3 patterns. We still believe in those patterns and we still trade off those patterns, but you have to believe that anything can happen. Each pattern has a unique outcome compared to the last one. And you have to accept the uniqueness of this particular opportunity, because if you go in with a biased attitude, then you're going to blind yourself from the signals, the trends, the ticks that are going against what you believe is going to happen. Now, every trading plan, every trading system should have a stop, so you shouldn't blow out your accounts, but we know people blow out their accounts because they don't have a system and they don't have stops. And more importantly, they get emotional, and that emotion blinds themselves to the uniqueness of this trading pattern, and they get into the tick for tick battle of, ooh, it's in my favor, oh, 5 against me. Ooh, 1 in my favor, 10 against me. You guys, we've all seen those cartoons when we were younger, and you see them in some of the kids' cartoons, you know, 1 for me, 1 for you. 1, 2 for me, 2 for you. 1, 2, 3 for me, 3 for you, you know? So how many ticks are in your favor, how many are against you? And if you don't believe in the uniqueness of each opportunity, your emotions will blind you to the signals of getting out. Our partners, great 10-day trial for our Futures Trading Room. Alex continues to be great. He has mentorships that's going on this week. But again, even in these consolidation days, we've made money. And obviously, if you're going to trade futures, then you got to look at what's going to give you the best leverage. And Our futures broker gives you the best leverage by giving you $300 intraday E-mini leverage, and if you sign up through us, you get 20 free contracts. And we also have a great futures day trading plan for you. This will allow you to know what chart patterns to look for, how to set up your charts, using Thinkorswim, how to set up all your charts. So great futures trading plan for you. As always, trade at your own risk, and if you want to learn more about futures, go to our YouTube channel and subscribe to our podcasts. Follow us on Twitter. Trade at your own risk, guys, and I'll see you next time.